Hello everyone, welcome to Smart Investing. Thank you guys for watching. Today, this video is going to be about the banking services sector or related sectors. So, we have here the first stock up. We're going to be doing these five, but I just want to say that before I review these five, again, these are American companies, and then on top of that, there is no particular order as to, you know, all these stocks. Why are they in the order that they're in? They just happen to be so. And then on top of that, I can't stress enough that uh, these stocks are not only banking services sector. They can be related sectors as well. And before I begin also as well, I'm going to be going over these five stocks. I'm going to be doing a fundamental analysis, technical analysis, which is charting, and then also the quant analysis, which is what and why a stock is used for and what is it best used for, if any, if it's good at all, is what I'm saying. So right here we are looking at the first page. This is the first page. So if you see my videos, you know what I'm talking about. So we have negative earnings, not good, not good. Market cap, and we have 52-week high and low, not good. I don't like seeing these numbers like that. So as you can see here, look at that chart. Straight downtrend. If you would have bought even before last year in 2021, if you bought before that, you would have lost close to 80%. So for the past 2 years in for this stock, uh, it rounded off about, you could say, $10, being generous, and then a low as of today is 1.35. So close to a little bit more than 85% of a loss at this point. So I already have two negatives for this stock. Negative on the technical analysis and negative for the fundamental analysis. And it's not even worth looking at this point. 5.5 when the overall rating is only a 2.7. So there you have it. This stock is not as good as it should be. I don't think I need to look at the rest of the fundamental data points, but that's what it is. So as for this stock, no, it is a big definite no to the watch list or even a portfolio. Next up that I have is MSBI. So we have here at 25.19 cents. So we have this stock at a low in the past 5 years, a low at about 11.40, and then we have a high for the last 5 years of about we can go with 28.70. You can go with that. So even then, you wouldn't have made much money on this stock. Looking at the market cap and everything, it looks okay. Looks okay. These guys are positive. For all you yield chasers out there, I recommend not only looking at those yields. Those yields are typically, that's a higher yield than normal for the banking sector. But again, this total return for the year, a 1.16, that's not that good. I've seen better, but they're not in the banking sector. Uh, if you want to go the financial route, just don't choose the banking sector. The banking sector, they're plummeting and they're not they're not taking, um, you know, they're just doing pretty bad for this year. Everybody is, but the banks are doing real bad. So that's all you can do. So we're gonna look at the analysis for the quants. I really don't have much to say. It's showing me that it has some value and some quality. I don't know about that. We could read up on this stock and see what it's good for. It says it's a diversified financial holding company. Uh, as for the 52-week high and low, that's pretty bad, and we're just gonna keep it at that. So for this stock, definite no to the watch list. Next stock up that I have is SLCT, Select Bancorp. So we can see here they have rising earnings. Look okay. Then we're still gonna check for more and other info other than that. So they are in the bank sector or the banking sector. We have here, look at this stock. From a perspective of owning this stock, it seems like they're on an uptrend. They have broken new highs, so they have broken the past 5 years a new high. So it went a high the last 5 years at about 1380. So then we have a high here of about 1960. So, a few bucks made in the total process if you would have bought during the 2020. And then we have here market cap at 325, 52-week low and high, difference of 13. Not bad. Better than most stocks. This company does not pay dividends, but they are profitable, netting those earnings per share at 1.04. So then we also have the analysis on the quant rating. It's not giving me anything, so I guess I can't do much. So yes, they're on a hot streak. They have been going up, but other than that, this stock is not showing me anything. So this stock is in the banking sector. Next one up I have is UWMC. So that chart, and especially that volume, that's pretty high. This company is profiting, and they are at 11% as of right now for the yields. So then, if you would have bought in 2021, again, you're buying high and then selling low. Uh, doesn't look good. The stock just keeps getting worse, to be honest. This stock is a $5 billion company. So we're gonna look at uh, PROV. So 52-week high and low of difference of about $4. $103 million market cap. It's pretty small. It might seem like a lot to us, but it's small. Uh, but these numbers, I just don't like them. I just can't get over them. As you can see here, all they have been paying is a 14 cents dividend. And who knows how long they've been paying this. They might have been paying this since the 90s. They've been around that long. So anyhow, this stock is a no-go. So no to the watch list or your personal portfolio, anything. I suggest it's not that good. So we have here, the next stock up is FOA, which stands for Finance of American Companies. If you would have bought, again, like I said it before, these crappy stocks, they'll start out with $10 for a few years, and all of a sudden, nothing happens and everything just goes downhill. Uh, the stock difference from basically $6 to $1.20 seems pretty active. That's too small of a market cap, and negative earnings. That's not good. So that's pretty much it for that one. So we're gonna move on pretty much to the next one. So next one up that we have is MSBI, and we have there 2020 they had a low of about 13 and change, and then as of right now, today, it is at 25. That would have been a bad investment. Not too much of a total return. Market cap is at $555 million. That's pretty tough for a company like this. Dividends per share, let's see. So they did pay a dividend of 29 cents. And then we have here not much of a raise. And then we're gonna look at some quant ratings real quick again. Yeah, that's all I have. So next one up, SLCT. So real quick, like positive earnings, and then their market cap is at 325. The chart, I like the way it looks. It's broken its 2018 highs and just keeps going up and up and up. Stock is relatively cheap compared to most other banking services sector or banking sector alone. Positive earnings at 1.0. 52-week high and low, difference of about $13. And then for the PE ratio, it's giving me 18 PE ratio. Other than that, everything looks pretty good. So that was negative. So that's pretty much it. So, like I said, none of these stocks are even remotely close as to their goals and what they want to align themselves with. So again, no, X means no, so 5 X's. So that means 5 declines. So do not add these to your watch list or personal portfolio. Thank you guys for watching, and I will see you guys in the next one.